Hello, everyone. My name is Triffany Hammond. I run a training service at www.triffx.com, triffx.com. And I'm here today to talk to you about using longer-term support and resistance zones to drill down to shorter time frames to find possible trade setups in your trading. And one of the reasons why I like to stick to basic support and resistance is that the rules are universal, they're consistent, and once you have some practice at drawing lines and recognizing zones and areas, it's actually quite an easy way to get started in your technical analysis. So this is what I like to do. I like to start with one larger time frame. For me, that's the daily. I'll drill down to a medium time frame. For me, that's the 4-hour. And then to the time frame that I like to trade. And for me, that's the 1 hour. But of course, this could apply to any 3 time frames. The idea is to find a broader context for the movement of the currency pair and then bring it down into an area that's actually tradable for the level that you like, for the time frame that you like. So what we're looking at here is the pound-dollar daily. I wanted to start here because we talked about this pair last week. And do you remember I thought I was being so funny by labeling this area important level? At the time that we were talking about it, we'd actually seen not one, but 2 extreme movements away from this level. I'm going to get rid of these for now. And even at the time, even while we were having this extreme movement away from this previous resistance level, I was talking about how this was a really important level for the market. It used it as support very frequently during this long period of consolidation. And the fact that it had driven price so sharply and so quickly away from that resistance level without coming back to retest it as support kind of raised a red flag for me in terms of a trend side trade. And we have a lot of reasons to believe that this is ready to go trend side, that it's ready to continue this previous uptrend. However, it's really not typical for the market to make huge moves like this without at least coming back and retapping the area that it broke through. So this was a significant level. We talked about it last week. We labeled it important level, and sure enough, now we've come back down. So if you've been following with me for a while, the next thing you're going to notice here is that we had an impulsive move to the long side. Look at, we had another impulsive move to the short side. So you can see here already what my predisposition is going to be with large impulsive moves like this. What is extremely typical is to have some measure of retracement, some kind of pullback. Now, if the market is looking at this movement that came above this resistance, if the market is looking at that and saying to itself, oops, never mind, and it wants to go short, what it is really likely to do is come back up and retest this important level. This was an important psychological level, and it will remain so for some time. In fact, if you've done any kind of backtesting on support and resistance levels at all, you'll notice that the horizontal support and resistance levels, you can mark them on a weekly chart, and you'll find that they're respected on an hourly chart. I mean, it's insane how long these levels will last and how often it'll come to. Let's do that now. Let's go to the weekly chart. You can see how this important level has been used before. Oops, let me take the scroll off. You can see how it's been used before, and it was way back in 2002. So it's really quite remarkable to see how these levels do change and they do hold true. So with that held in mind, and with this sharp impulsive move to the downside, what we want to watch for is some kind of pullback, even if it's a small one. If the market has decided to continue the downward side of this, it is extremely likely that we'll see some pullback up to this level before it does that. The other option, the other possibility is that this is simply the retest of this level and it's ready to go trend side again. So let's start to drill down from this point forward then with those 2 possibilities in mind, right? Because we don't know what the market's going to do, but we know that it has those 2 options, right? I guess 3, up, down, or sideways, right? So I'm going to go to the 4-hour chart now, and I'm going to see what it's doing since it broke that level. It broke that level, had an extremely impulsive move even below that level, and then immediately showed indecision. this level is extremely important to me now because the market, even though it busted through with some enthusiasm, it's not quite sure what to do with itself now. And if you take a look at the broader scope of things, what's really going on worldwide, the market has shown a high level of aversion to risk for a very long time. And now that assets are becoming liquid again and markets are looking to stabilize, we've seen a lot of good news fundamentally, at least in year-over-year data between a lot of different countries. Actually, the fundamental announcements are showing some signs of stabilizing. And the market is at some point wanting to take on risk again. That generally means selling the dollars, the US dollar, to buy other currencies. It also means picking up the carry trade again and taking that forward. Those of you who don't know what the carry trade is, it's basically the selling of a low interest rate currency like the yen against a high interest rate currency like the pound. And they don't care what goes on with the currency, with the spot market. What they're after is the interest differential, but it's a risky trade. So when the market's willing to take on risk, it'll pick up that carry trade again. So these are some things, and the market seems to be getting kind of an itchy trigger finger. The market really has that feel that it just wants to take on risk. It wants to put money back into the market. It wants to play again. It's been sitting on the sidelines for too long. So now we're seeing that even though the market bought back those dollars and did so with enthusiasm, right, it immediately showed indecision. It's like the market's asking itself, am I really afraid or can I keep forging ahead? So this area of indecision becomes really super important to me. The other interesting thing about this area is you can see here, if I were to put on, well, actually right where price is right now, you can see how this area of resistance has been hit, and actually in between, if you've been with me for a while, you've heard me say I talk about these muddy areas. It seems to have created this, actually consolidated below this muddy area. This area that becomes more the support and resistance zone, right? The area that market has a tendency to push price above in little fits and starts, in little kind of testing the water type movements. And this has actually come even below that. So it seems like, looking at this, if this is going to come back and retrace, like I think it will, up to this important level that we labeled before, that would be really easy for it to do, even as a nudge reaction. So right now, what I'm saying is we don't even have to determine if this is going to go long or short after this consolidation. All we have to determine is where do we want to go when the market decides to make its choice. I'm going to now come down to the 1 hour chart. Actually, let me get rid of that box, just so we don't muddy the charts too much, not too difficult to read. And now we get an even clearer picture of what this area of indecision looks like. On the 4 hour chart, we had some big candles up, big candles down, big candles up. Really doesn't say a whole lot. But on the 1 hour chart, we're actually seeing a lot more decision to the top and to the bottom of this channel, which tells me that what we should be seeing next is some winding up, because generally we get one big swing. In this case, we actually got two, all the way up here, all the way down here. Then generally what will happen is a tightening up before a breakout. So what we're seeing now is a resistance level right here. And we have a low that met the low before, so that makes it a little double bottom. Even if you didn't know that, it wouldn't matter because the sentiment's the same. Once price drove down that low, it rejected it and came right back up, right? We're seeing price rejection twice at that level. And now we actually have a new higher low. So what I'm watching now for this becomes the area that I want to watch. If I get price action above this 6,500 area, and I'm looking for like a good solid close, right? Or a close and then a bounce. It seems reasonable to me that I could take, 50 pips out of that next 80 pip movement. Why wouldn't I just go for that 65.80 if I think it's going to get up there? Well, because like we talked about here, how we can get these wild swings and then a tightening up. I don't want to get in a situation where I'm heading for that ultimate profit target and I miss my profit target by just a little bit and I have to suffer through a lot of mental anguish while it decides to go sideways or worse against me. So Doug Hayward asked, oh, hi Jerry, glad to have you here too. I've got some friends here, that's really nice. So Doug Hayward asked, would you say a clean break of the important level would be a time to take this trade long? Yes, absolutely. I would totally agree with that. Yeah, because that's a close above this undecided area. Another thing you could do, if you really did feel like this was merely a pullback, if this was merely a retracement to this support level before it really went long and you had a real aggressive profit target that's way up here, you could take this trade in fits and starts, right? You could get in long, take out some profit near that 65.80 mark, let it go sideways again at this important level, right? Because it has a tendency to do that. Like we said, one wild swing and then a lot of sideways movement. Get in again. You can take this type of trade using support and resistance levels all the way up if that was your intent. Can you see all of these levels? And all I did is I found levels where the market showed at least some hesitancy before it showed conviction, right? That's all support and resistance is. It's identifying those levels that the market respects. That's so, so important. And you can see how all of these levels, as they were created on the way up, this one you might have had up here, right? As these were created all the way up, they were respected all the way down. So you get a candle like this, you get a retest like this, you grab some of these pips, you wait, you grab some of these pips, you wait, you grab some of these pips, you wait. You can see how these levels are used over and over again. And the amazing thing is, let's go ahead, I just put these on here, let's go to the 4-hour chart. Look, one of these hits the top of this wick over here. One of them hits barely above these bodies here. Let's go to an even longer term trend to see if we can find where those other areas are hitting. Oh gosh, it was sliced right through there, but that was on the daily chart. How about on the 4-hour chart? Look, they were respected here. Each one of these candles almost stopped on one of these levels. Even way back in time, that's October of 2008. So these levels, they stay important. They really do. And then before that, of course, we had huge trending moves, so we're not going to find much there. But you get the idea that it's extremely easy with some practice to find these levels and use them as a way to trade. So tell me, did that make sense? Do you have questions? What do you about support and resistance? I've talked today mainly about horizontal levels. Haven't talked at all about trend lines, but I've talked about those in the past. Throw me some of your questions and your thoughts as I go through some of this. Are you eyeballing them or using fibs? Right now, honestly, I love fibs. I do. Let me show you what I do with fibs. I'm going to go back and I'm going to take all of these off. Whoops. To me, support and resistance levels are king. They absolutely rule. I like fibs because they give me an idea, generally for things like for channel trading, even like, the wide end of the triangles or the most recent price movement on tops and double tops and double bottoms. Generally, the rule of thumb is to go for 100% extension level of those moves. And it's easy to find those price points by throwing some fibs on. But I'll tell you what I do. I'll throw it on that 100% mark, and then I look and I see if that makes sense Fibonacci level-wise. So here, that profit target's a little too aggressive for me. I'm going to actually tighten that up. And that comes right near that 65.80 where we had that important level anyway. So you can see how I think it's a great place to start But very often what can happen if we stick straight to those fibs, the market's watching those fib levels too. And the market's not going to take the chance that some other big market maker out there is going to cut short their profit right near those psychological levels, right? The even number, the 50 mark, the 200% fib level, for crying out loud. So even the market makers will kind of pull back a little bit near those numbers and get close enough, take their profit, and go home. So why shouldn't we do the same? Great question. Triff, when you're entering on the break, a certain number of pips or after a candle close of break, okay. This is going to mean different things for different people, and there is a reason why I'm a little bit sketchy about what I do specifically. I like a close. I like to take a close. That's what I like to do. I take a very small position. What I prefer to see is a bounce, and then I can take a second position on the bounce. So that's how I do it. But what I really want to talk about here is what would your preference be? There's a psychology, there's a type of trader that prefers to not let any opportunity go by. So a break is a break, and that's going to be the place that they trade, and that's going to be what they take. There's another type of trader that likes the break, but really wants the reassurance, and they're going to watch that break, wait for that little pullback, and then take the bounce. Now that first type of trader is going to take a lot more trades and a few more losses than the second type of trader. The second type of trader is going to feel a lot more confident about their trading, but they're going to be passing up on some trades. So what I really encourage you to do, Jose, is find out which of those you are. What's your preference? And the only way you're going to be able to do that is go back, watch scenarios like this, look at the charts from this standpoint, and see which ones you like. The next I also get a lot of questions on why sometimes I'll cut off wicks and sometimes I don't, and why don't I always consider the wicks and things like that. Those are personal preferences that have come up from my personal experience, and all of that personal experience has started years ago. And I shouldn't even just say years ago because I still backtest. But it started, I had to create a baseline for my education in trading, and that was all my backtesting. That's how I determined whether or not I like wicks and shadows over bodies. That's how I determined what I deemed to be important levels or not. So I encourage you to do the same. Akio is asking, what do I call these levels again? Oh, I had just called this level right here. I had just called it an important level. I don't really have a cutesy name for it or anything. The point I was making with it was that it was significant resistance. The market was really hesitant to close above that. So when it closed above without a retracement, it seemed unlikely to me that it would maintain that kind of momentum without some kind of pullback to that level. Would they be scalp trades for 20 more pips, or are there more pips between those levels? Right now, Harley, they're scalping trades. They are. You find a 50, 60, 70 pip move, and you try to grab, 40 to 50 pips of those. But they don't have to be. This type of thing, the reason why they're scalping trades right now is because those movements are so small. In a trending market, though, they widen out, and you get a lot more pips in between, and you can get these larger trades, and they create a better risk to reward type scenario. That just happens to be market conditions right now because the market is loath to trend. The market right now really wants to just kind of go sideways and wait for somebody else to make the first move. Can you show where most would take a trade and where I wouldn't? Sure. Oh, and before I do that, let's talk about Akio's, how did I determine that resistance level? This is on the daily chart, and I like to start on the daily chart because it gives me context for what's going on my smaller time frames. And this is an important question, and this is one of those things, Akio, that I was saying earlier. At some point, it's wonderful that you're asking these questions. I want you to participate. I want your input. But at some point, you're going to have to ask yourself these questions. How do you find these levels, and what are your preferences? But some people would take a look at this resistance level, and they'd look at the difference between these two wicks, and that would be their important level, right? And now in hindsight, you can see that that's actually pretty viable. that these two larger candles actually held to that. I hold the theory, what I like to see, and this is based on my own personal experience, is more hits of that line. I want to see more places in the historical price where the market showed an opinion at these levels. And in this case, this was an opinion of aversion, right? It was hesitancy, where it came up and rejected it here, came up and rejected it here, nearly here, it did it here, it did it with these two bodies, did it again here, and nearly here. So that's why that became an important level to me. And that's true on any time frame. So as I drill down and I can see some more market action in here, you can see where I start finding those other levels as well. That is the same reason why this area here, the top of this and the bottom of this, is important, because I can see price hesitancy between these two areas. So that's how I determine it. Yes, Jerry, I actually got some of this short. Absolutely. I'm out of it now, and I'm actually looking for an opportunity to take the long for the same reason I took the short. So Ed is asking, where would I take the trade? So what I'm willing to do is exactly what I said a little bit earlier. I'm going to look for a close above this level. And not surprisingly, it's right at the that even number, right? That 6,500 mark. I'm going to look for a close above that, and I'm going to take one small position, and I'm kind of going to come back, and if I get a retracement on that, I'm going to add a position off the bounce of the retracement. Now, if it comes back and I'm just wrong and it ends up looking something like this, I'll get out. I don't really like to sit through a lot of this stuff. In fact, I was long right here, and I got out on this candle right here. But it's a very small position, right? It's less than 1% of my account, that first position is. So I don't mind taking a little loss like that. I would actually rather take a loss. My psychological profile is such that I would rather take a loss by choice right here than have a stop that's too deep and have me whipsawed before it gets my way. I mean, a stop that's too shallow. So, but that's me. Not everybody's going to be that way. Now, Jerry's saying he's already long a little position, and I think that's brilliant, Jerry, because you had the second area of indecision, and this was actually a confirmation candle on these almost tweezers right here, right? I think there's plenty of argument to already be long. And what Jerry's trying to do probably is take that first position, increase that risk to reward, so or that reward to risk, or however, with it, because that's going to keep a stop loss a little bit more shallow, with underneath the lows here, and going for that extension level to the next support and resistance is it is going to be an opportunity to stack at the close, stack at the bounce, stack in the middle, that sort of thing. So, oh good, I'm glad you said I'm right, Jerry, because I just totally spoke for you there. But I like to take the break, I like to take the bounce, and then generally there's plenty, and this is really getting into the little details of things. You can see all kinds of little support and resistance areas. I call them minor support and resistance areas that you can take as they cross those levels and toward your profit target. You're welcome, Mikey. I'm glad that explanation made sense. Isn't that the pound dollar creating an ascending triangle with the supply level weakening each time it's hit? It is making an ascending triangle by technical standards. The reason why I don't want to call it an ascending triangle is generally an ascending triangle is a continuation pattern of a previous trend. On the daily chart, we had an ascending triangle where it came into it from an uptrend. It hit this resistance level several times while all the time making new higher lows. That's an ascending triangle. Here on the daily or on the 1 hour chart, the argument is there because we're making new higher lows by hitting the same resistance level. However, it didn't come into it from an uptrend. So by technical, definitions, that's not the case. However, what you're seeing, Jose, is that sentiment. You're reading the sentiment spot on. That while it rejected this price, came up and rejected this price. The market didn't have enough drive to pull it back down. You know, look, if we were looking at this on, let's say, a 15-minute chart, we'd see that a lot clearer, wouldn't we? So here we have price rejection down here at the low, price rejection up here at the high. Here it didn't come anywhere near that low again. We actually got a new higher low. Price rejection again, new higher low. Price rejection again, new higher low. So the sentiment is definitely driving that price to the upside. Absolutely. Excellent observation. And so many times it's really not about what the definition of the price pattern is. It's about reading that sentiment. So well done, Jose. What do I mean by a bounce, and can I have more detail? Sure. I wish I had drawing tools. Somebody at one of these, and maybe you're here again, shared with me where I could get drawing tools, and I didn't follow up on it. I wish I could draw on these charts for you right here. Oh, here's a failed bounce. Here's exactly what I'm talking about. This will work. So here we had a candle that broke above and came back and retested that area, and then confirmed that retest with another candle that showed conviction above. That is a bounce. Now this is a failed bounce because it came back down and closed underneath that level. But this is the kind of behavior that I'm looking for when I talk about a bounce. Here's a bounce. It came back down below, came up and retested this area, closed below the retest area, and then continued to go on short. This is a bounce. Excellent question. I'm glad you asked that. It's so easy for me to assume that we're all, speaking the same language, and oftentimes we're not. I'm glad you had me define it. Doug Hayward says the only thing you can control is your risk. Absolutely 10,000 times correct. I agree with you a million times over. We can't ever know for sure what the market's going to do. We can't ever know for sure what the news announcements are going to be. We can't ever know for sure when the next SARS or swine flu or hurricane or terrorist attack or whatever is going to move the market and make the market fearful, because all of those things are true, right? All of those things affect the market. We can't control that. All we control is the amount of money that we have at risk and how we manage our trades. And if you haven't figured a way out to do that yet, you need to go back to the drawing board. You need to back test more. You need to experiment with your money management. Find a way for you to maximize those wins and minimize those losses, because that is the only piece we have any control over. Well, that and our own psychology, right? If we work at it. It all takes work. So Jose said yes, the daily. Oh, you were looking at the daily for the ascending triangle. Yes. So we're looking for longs on the pullbacks. That's what I'm saying, Jose. Yep, exactly, spot on. Please can you explain how to use support and resistance levels to estimate where I can put a stop loss? Yeah, let's go back to that 15-minute chart because we saw some action in there that worked out really well. Here's what I like to do, Jose. This is what I do because I don't like having a stop that's too shallow and gets me whipsawed out of the trade. So what that means is my stop is generally pretty deep by comparison. But the way that I stack things, the way that I take advantage and start off with small positions, usually even if I get stopped out on a deep stop that's pip-wise, I don't usually have a whole lot of money at stake when that happens. So that taking a tiny little position like that helps me be able to keep a nice deep stop without feeling like I'm blowing my account or having a lot at risk or anything like that. But I think it's a great question. Let's talk about stop loss. What I do is I use those minor support and resistance levels. So let's come back here, and I'm going to put a line on here, and I'm going to move it one at a time. We're going to pretend that we can only see past this level. Okay, so we get a nice convicted close above the area that looks like decent resistance. Now, this wasn't the way I traded this. This is a 15-minute chart. It's not something I trade on, but someone out there might like the 15-minute chart, and my whole point is illustrative. I just want to show you what I do. So this comes up and it retests, it makes a new higher low and breaks up. Again, talking about that place of kind of that ascending triangle, which this isn't an ascending triangle, but reading that sentiment of new higher lows with a similar resistance level, that's going to give me a preference for the long anyway, right? So I get a candle here that closes with conviction above that area. I now have one minor support and resistance level here. I have another one here. My stop goes below that. Those are the minor support and resistance levels that I watch, and that's what I do with my stops. But here are some options. Here are some things you can do to play with this in your backtesting and really find out what your preferences are. What if you took a close outside, and if it closed back inside the box, you're out right here? Couldn't you do that? Absolutely. What that's going to mean is you're going to take a lot more small losses. One here, one here, one here, one here. But as long as those are teeny tiny positions, that may not bother you because psychologically you don't want a stop that's way down here. Psychologically you can't handle that. And this, we're talking about a small number of pips in this range, but imagine in a trending market when these ranges get really big, those levels can get fairly deep. So, you could look at a close back inside that box. You could look at just right underneath that first support and resistance level. You could take the candle that breaks out, however many pips that is, and you could trail it by that many. There's a number of different ways to test and see how you like to trade and what that looks like for you personally. But that's what I do. I use the minor levels. Excellent. Great questions. Any other questions? So you enter on the bounce below or after a bull candle? Oh gosh, I didn't realize I was backed up on questions here. I'm sorry. I'll take the close above and then the bounce. And when you say taking, when do you take it? I'll take my first position on the close above. Wait for a bounce. When it comes back down to this level and prints a confirmation candle of some kind of undecided candle as it reaches that support level, then I'll add a position there and I'll take the bounce up away from there. That means getting into the trade, yeah. Will you get out before the FOMC tomorrow? The only news announcement I really make sure that I'm not trading during, or at least I've locked in profit on a trade or something, is non-farm payroll. I pay attention to the news announcements. I want to know what's out there. I want to know what's going on. I want to know what's driving the overall sentiment in the marketplace. However, you can't avoid the news. And it can really create a situation where it either interferes with your technical analysis or it paralyzes you completely and you're afraid to trade. So I'm not even going to worry about it. What do you look for to determine your exits? Well, I showed you my profit target, and then we just talked about the stop loss. So you might have asked that question before I had explained all of that. But I think that I've gone through that. If not, and it wasn't clear, Maverick, let me know, and I'll be happy to go over it again. Absolutely happy to do so. That's right, Balance. That's exactly what I do. Do I use pivots? Pivots are actually kind of a really interesting tool to use when you have large impulsive moves. So yeah, sometimes I will throw on a pivot to see if that impulsive move made the pair behave any differently than it usually does, right? Because if you're looking for market correction, what you're looking for is did the market move so crazy, so out of the norm that the market is going to freak out and try to correct that before before it goes back to normal behavior. And since pivots have a tendency to be adhered to, right? You'll see as you put pivots on how they'll kind of consolidate around those pivot points and kind of hang to that area until they're bumped up. That'll move up to the next one. And it'll move up. So if that leaves that pivot point dramatically and impulsively, it can be a really useful tool to see how how that reacts after an impulsive move. So sure, sometimes I'll use those, absolutely. Jerry says maybe tighten your stops. Oh, about news announcements. Yeah, if there's something I think is market moving, I'll lock in profit on a trade first. Because if I'm in the black, it's silly to gamble with that money. That's money earned. That's a trade that I put time into analyzing, planning, writing down in my plan, keeping track of, tightening my stops by fractal, by these minor support and resistance levels. That's something that I've really worked hard for, and I don't want to gamble that away. I don't want to be irresponsible with that. So yeah, I'll lock in profit or take most of the position off or something. The news announcement could help me as easily as it could hurt me. So what I don't want to do is have the news announcements paralyze me. So how do you deal with the news? Large stop loss? Yeah, I unless there's a big one, like I said, non-farm payrolls. Generally I'm done trading by Wednesday anyhow. Honestly, I mainly trade Monday, Tuesday, Wednesday. I take advantage of that early week volume, and usually I've taken 3-4 really well planned out trades, and by Thursday or Friday I'm watching the market freak out by late week news announcements, and I don't end up being a part of it. I mean, there are times I do have, if I'm playing a daily pattern on the chart, there are times that I'm holding on for longer. But those, if you're on the daily chart, you have such a deep stop loss anyway that all those price points, all that volatility from the news announcements gets absorbed in that daily candle anyway. So, yeah. Good questions. You guys are great. Wonderful questions. Do you write down all your trades in a journal before you take the trade, or do you see what's in front of you? Oh, Jose, what a fantastic question. I don't know if the recording, I'm going to read this because I don't know if the recording can see questions or not. Do you write down all your trades in a journal before you take the trade, or do you see what's in front of you and just trade it? I absolutely, positively make sure that I take a calm time, either end of Friday after market close or Sunday before market open, and I put my trading plan together then. Absolutely, I make sure that I am planning my trades during times that I don't have adrenaline running, that I don't have market news making short-term moves in the market that I can get impulsive about or zealous about and jump in and get greedy about. Oh, I can get 10 pips out of that. I can get 20 pips out of that. When that adrenaline gets rushing, and when you start to see that move and all you want to do is jump on board and get a piece of it, I tell you, you can blow up your account. You can just wreak havoc on your account doing that. So I absolutely always make sure I have a plan. And I don't make my plan when things are moving. It's always at a time that the market's closed. I'll adjust the plan. Obviously, coming into Monday, I had a plan for the short pound dollar, right? Because I was expecting it to come back to that important level. Now that has happened, I'm altering my plan, but I've always known that once it hit that level, I would then be watching for a long on it. So that's all been part of the ebb and flow of the marketplace, and that was something I had in mind before the market even started moving. Excellent question, Jose. I'm glad you asked that one for sure. Do you forgive yourself when you have a loss? Yes. It gets easier and easier. Easier and easier to forgive yourself. Now, forgiving yourself isn't necessarily forgetting the loss, right? It's not a healthy thing to do to take a loss and then kind of stick your head in the sand about it and not learn anything from it. Here's the question I ask myself. Win or loss, the question I ask myself is always, was it a good trade? What I mean by was it a good trade is, was it planned out? Did I execute it when I said I would? And did I take the trade calmly and rationally? If I did those three things, basically I'm asking myself, did I follow my rules, right? If I followed my rules, it was a good trade, even if it was a loss. So once I can recognize that, I take a loss, did it follow my rules? Yes. If it didn't follow my rules, if I did try to jump in and do something crazy with the trading, or suddenly pull up a pair I don't normally pull up and go, ooh, that's just like this other pair, I'll get in on it now. If I do something like that, then I ask myself why. What else is going on in my life that I felt like I had to compensate by making some kind of crazy trades? And generally, for me, it does end up being one of two things. If I become impulsive in my trading, it's either because I have too much going on or not enough going on. Isn't that silly? I'm either bored and I just want to trade, or I've got so much going on that I'm trying to just fit stuff in and I don't really think about it, so I get in. So, but that's me, Excellent question. So Thursday, Friday, you're sunning yourself on the beach. Yeah, that would be great if that's what I was doing with my time. I'm actually working on a book and trying to get a book proposal together, and of course I've got my training business, and my next thing for the training business is, I'm just constantly looking at ways to improve it and using new tools and things like that. So actually Thursday and Friday ends up being other types of business, just not trading. Do you use Trendlines? Yeah, I do like to use Trendlines, but honestly, even when I use a Trendline, what I watch for, here's a perfect example. I'm going to show you exactly what I'm talking about. So the price followed this price pattern pretty closely in here, and this sharp deviation created an opportunity to look for a close below that trend line. But a close below that trend line isn't enough for me because it could just go sideways before going back up. So I still use them in conjunction with a horizontal level. That's almost exactly how I took that trade right there. So, yeah, excellent. When you take your trades, once they're planned out, is it a certain time or a certain price? A certain price. Yeah. And there are times, like this important level, I took a little bit of this short up here, down to this level here. But these last 50 pips, they were pending orders because once it got away from the price so much, and I felt like there was a time that it would come back to this level, I actually used pending orders in that case because I felt if it was going to come back to that important level, it was going to do so very quickly and had the potential to come quickly away and then shoot back up way off of that price, because that happens a lot. That happens a lot, actually, where you'll have that quick movement, barely touch it, and pull away. And I was almost certain it would happen while I was sleeping. So that's what I did. So price and space compared to the message by the previous candles. Yes, that's exactly right. Jerry asks a great question too. How can you plan an entire week? Aren't there justifiable adjustments? Yes, absolutely there. And that's exactly what I'm saying. How my plan at the beginning of the week was to talk about this, or was to take this trade on this short side, right? This correction down here. But I also knew in my head that if this was going to happen with any kind of impulse, I also wanted to be ready for the long that happened afterward. So then, yesterday afternoon, after everything hit and things started to look like it was time to move sideways, I put a whole nother plan together for the next few days. So, yeah. Oh, and it looks like we're going to be wrapping up here. So I'm going to go ahead and head out. Let me put my website up here in case you wanted to find me. There I am, but I'm always here on Tuesdays at noon Eastern Time as well. So thank you guys so much. Great questions. I really appreciate that you took the time to be here and participate. Thanks again, FX Street, Maud, Adinda, for all your hard work and letting me be here. It always means so much to me. And come see me at my website if you want, or I'll see you next week. Either way, take care of you. Bye-bye.